Everybody needs healthcare, or will at some point. And when there's something everyone needs, that means a huge opportunity for investors. More than $7.8 trillion is spent on healthcare globally. Nearly half of that total is spent in the United States only. With the healthcare sector growing significantly faster than the overall global economy, these numbers will almost certainly be much bigger by the end of the decade. How can investors profit from this growth? Here's what you need to know about investing in healthcare stocks. Hey guys, my name is Ken, here to talk about personal finance and investments. Today we're gonna review types of healthcare stocks, how to evaluate them, what are the risks, and of course we'll review some of the top healthcare stocks to invest in. If you are new to the channel, invest in subscription to the channel. If you already did that, make sure to destroy the like button. You're also welcome to support the channel, all the links are down in the description. So let's first review what types of healthcare stocks are there. The healthcare sector is so broad that there are several different kinds of healthcare stocks. Four of the most important types are drug stocks. This is drug makers focus on developing drugs for treating diseases. Biotechs use living organisms such as bacteria or enzymes to develop drugs, while pharmaceutical companies use chemicals. Second one is medical devices stocks. Medical device companies make devices used in the care of patients. These devices range from simple ones such as disposable gloves and thermometers to the very complex, including artificial heart valves and robotic surgical systems. Next type of stocks is payer stocks. Payers, including health insurers and pharmacy benefits managers, PBMs, play an especially important role in the United States healthcare system. Insurers charge premiums to individuals and employers to pay for healthcare costs, while PBMs administer prescription drug benefits for employers and health plans. And the fourth type of stocks is healthcare provider stocks. These healthcare providers stand at the front lines delivering healthcare services to patients. They include hospitals, physician practices, home health companies, and long-term care facilities. So these are types of healthcare stocks. Now let's see what to look for in healthcare stocks. How can you find the best healthcare stocks to buy? There are actually four key things to look for. Number one is about growth prospects. Determine how quickly revenue has grown in recent years. The future doesn't always mirror the past, but if a company hasn't been able to deliver strong revenue growth so far, it probably won't in the future either. I would recommend to read the investor presentations on companies' websites to learn what their strategy is for growth and how big they think their potential market is. Check out the company's rivals to see if their strategies seem to be just as good or even better. Note that companies will often mention specific competitors by name in their 10K annual regulatory filing to the US Securities and Exchange Commission. Second one to look for is financial strength. Those regulatory filings to the SEC also include financial statements that help you evaluate the financial strength of a given company. Ideally, a company will already be profitable. If it isn't, make sure you learn how it plans to achieve profitability and how quickly it expects to do so. A company's cash position, which includes cash, cash equivalents, and short-term investments, can be found on the balance sheet. Think about cash position the same way you think about the amount of money in your checking, savings, and retirement accounts. The more, the better. Another important gauge of financial strength is the free cash flow. As with the cash position, the higher a company's free cash flow, the stronger its financial position. Third thing to look for is valuation. You'd want to know how much a new car is worth before buying it, right? Determining the valuation of a healthcare stock before buying it is also important so you can make sure you are paying a fair price. There are quite a few valuation metrics here. The most popular is the price to earnings (PE) ratio, which measures the price of a stock in relation to its earnings per share. In other words, what you get in earnings for every dollar you invest. Comparing PE ratios with other stocks in the same industry will help you determine if the stock is relatively cheap or relatively expensive. But just because a stock's PE ratio is higher than those of its peers doesn't mean it's not a good buy. It could indicate that the company's growth prospects are much better than those of its rivals. Be sure to also check out the stock's price-to-earnings to growth ratio (PEG ratio), which incorporates projected earnings growth rates, typically over 5 years. Stocks with lower PEG ratios, especially when the ratios are less than 1, are more effectively valued than those with higher PEG ratios. And another thing to look for is dividends. Some healthcare stocks pay dividends, a portion of earnings the company returns to shareholders. Dividends can boost the overall return you receive from owning a stock. The dividend yield tells you how large a stock's annual dividend payments are as a percentage of the current share price. Consider the stock's payout ratio, which measures dividends as a percentage of earnings and indicates how much of the company's cash is being used to cover the dividend. The lower the payout ratio, the greater the likelihood that the company will be able to keep paying dividends in the future. Now when we reviewed what to look for in healthcare stocks, now let's try to pick some of the top healthcare stocks. I know you were waiting for it. First one to review is Vertex Pharmaceuticals. Vertex Pharmaceuticals stands out as one of the top biotech stocks on the market. The company primarily focuses on developing drugs that treat the underlying cause of cystic fibrosis, a rare genetic disease that damages lungs and other organs. Vertex's newest CF drug, Trikafta, could boost the number of patients that its drugs can treat by more than 50%. The company is also developing drugs targeting other rare genetic diseases as well as more common diseases including type 1 diabetes. Another company in our list is Intuitive Surgical. This is a great example of the robotic surgical system type of medical device stock. The company's Da Vinci robotic surgical system has been used in more than 7.2 million procedures since its introduction in 1999. The recent pandemic hurt the company's business as elective surgeries were postponed. However, the availability of vaccines should help bring the pandemic to an end and return Intuitive's business to its previous strong growth. Over the long run, the company should have tremendous growth opportunities ahead, with more older people requiring the types of surgical procedures for which Da Vinci is frequently used. And here's another great company, United Health Group. This company ranks as the largest health insurer in the world. It also operates one of the biggest PBMs. The company's size, stability, and dividend make United Health Group one of the most attractive payer stocks on the market. And I can't miss the Teledoc Health. This is the next company we are reviewing. This company is arguably one of the best healthcare provider stocks. The company provides telehealth services, delivering healthcare remotely through the internet and over the phone. Teledoc's acquisition of Livongo Health in 2020 gave the company a digital health platform for helping people manage chronic conditions such as diabetes. The pandemic has driven increased adoption of virtual care services. Teledoc's growth prospects should be very good even after the pandemic ends. Individuals, employers, governments, and health insurers are seeking to control healthcare costs, which telehealth and chronic disease management help achieve. Every investment has own risks. So what are the risks of investing in healthcare stocks? Investing in any kind of stock comes with risk, including the possibility that competitors will develop products and services that are more successful in the market. Healthcare stocks face this risk as well as others more specific to the sector. Healthcare is highly regulated. Drug makers and medical device makers could fail to secure the necessary regulatory approvals to market new products, and regulatory changes could drastically alter a healthcare stock's growth prospect. In the US, the Food and Drug Administration, FDA, oversees the regulation of drugs and medical devices. It's smart to pay attention to any FDA action related to stocks you are watching. I'm pretty sure you have a healthcare stock in your portfolio. Let me know in the comments what stocks are you interested in and why. I'd love to know about it. Here are more other videos about personal finance and investments for you. Make sure to subscribe to the channel, smash the like button and hit the notification bell. See you in the next video.